Hello students, in present video I am going to explain about 15th problem from depreciation topic. I am taking this question from Pankaj publications book. See the question first. A company bought a second-hand machine on 1st January 2003 for 37,000 rupees and immediately spent 2,000 rupees on its repairs and 1,000 rupees on its erection. On 1st July 2004, it purchased another machine for 10,000 rupees and on 1st July 2005, it sold off the first machine for 28,000 rupees and bought another one for 25,000 rupees. On 1st July 2006, the second machine was also sold off for 2,000 rupees. Depreciation was provided on machinery at the rate of 10% per annum on the original cost annually on 31st December. In 2004, however, the company changed the method of providing depreciation and adopted the written down value method with a rate of depreciation at 15% per annum. Prepare the machinery account for 4 years commencing from the acquisition of the first machine. This is the question. Let us see the solution for this. This is machinery account, date, particulars amount, date, particulars amount. First, on 1st January 2003, they purchased one asset for 37,000 rupees and they spent 2,000 plus 1,000 on its overall and installation. So, on 1st January 2003 debit side, for purchases you have to write to bank account 37,000 rupees. Again for this 2,000 and 1,000 expenses, on the same day to bank account 3,000 rupees. Now cost of the asset becomes 40,000 rupees. Then every year they are closing accounts on 31st December. No? So first year last date is 31st December 2003. On that day we have to provide depreciation. Depreciation credit side we should write. By depreciation account, cost of the asset 40,000. On that 10% depreciation is 4,000 rupees. And they purchased on 1st January 2003. No? From 1st January to 31st December, full year they used. Therefore, months are not required here. Then, debit total 40,000 minus credit amount 4,000 is equal 36,000 is balance carried down on the same day. Two side total 40,000, 40,000. So, first year is completed. Come to next year. This balance carried down amount we have to bring to next date. So next date of 31st December 3 is 1st January 2004. To balance brought down this 36,000 rupees debit side. And in this 2004 year, they purchased another asset for 10,000 rupees on 1st July 2004. So 1st July 2004 debit side to bank account 10,000 rupees. In 2004 year, what happened? In 2004, however, the company changed the method of providing depreciation and adopted written down value method with a rate of depreciation at 15%. So in 2003 year, first year, company followed fixed installment method. Therefore, on cost of the asset 40,000 we have calculated depreciation. But in 2004 year, on 31st December, they want to change the method from straight line method to written down value method, and retrospective word is not given. Means what? In 14th problem also clearly explained. So when method of depreciation is changed, the adjustment may be in two manners. Change in depreciation method with the immediate effect, with the retrospective effect. So in present problem with the retrospective effect, this sentence is not given. Means we should understand that this is with the immediate effect method, and in this method for depreciations no adjustments are required. Therefore, in first year as per fixed installment method we calculated depreciation. From second year onwards as per written down value method we will continue the problem, and in first year depreciation as per fixed installment, depreciation as per written down value method. Between these two depreciations adjustment is not required because retrospective word is not given. No? So on 31st December 2004, now we have two machines. First machine cost is 40,000 rupees. Second machine cost is 10,000 rupees. And on this date, now diminishing balance method we should use. And the rate of depreciation is also changed. As per old method, at the rate of 10% we should calculate. But as per new method, at the rate of 15% we have to provide depreciation now. So instead of 10%, from now onwards 15% we should take. And diminishing balance method, what is the feature of this method? Every year you have to provide depreciation on opening balance of the asset. First asset cost is 40,000, but in second year its opening balance is 36,000. Now on 36,000 at the rate of 15% for full year depreciation is 5,400. Next 10,000 worth asset. On that at the rate of 15%, only for 6 months you have to provide depreciation, because second asset is purchased on 1st July. From 1st July to 31st December, 6 months only we use this asset now. So second asset depreciation 750, total 6,150 in outer column. 46,000 debit total minus credit depreciation 6,150 becomes balance carried down 39,850. Two sides highest total 46,000, 46,000. So second year is completed. Come to third year, this balance carried down amount debit side we should bring. Date is next date of this date, 1st January 2005. To balance brought down 39,850. In 2005 year what happened? They purchased another asset for 25,000 rupees on 1st July 2005. And first asset 40,000 worth asset they sold for 28,000 rupees. When on 1st July 2005. When we purchase the asset, debit side we are writing to bank. When we sell the asset, credit side we should write by bank. So sale date of first asset 1st July 2005 by bank account, they sold it for 28,000 rupees. So up to that date we have to provide depreciation now by depreciation account on first asset. And don't forget, this is diminishing balance method. So opening balance of the asset, on that we have to provide the depreciation now. Now this is a first asset opening balance on 1st January 2005 we need. 2005 we need. So 39,850 is not the value of first asset opening balance, because in this value this second asset 10,000 worth asset opening balance is also included. Therefore first asset opening balance separately again we have to calculate in inner column. See, previous year 2004 first asset opening balance 36,000, and in 2004 first asset depreciation is 5,400. So from this cost 36,000, if you deduct 5,400, then 2005 starting date opening balance of first asset comes now. So in inner column 36,000, this amount minus depreciation for 2004 5,400, 30,600. So in this 39,850 first asset related opening balance is 30,600. On that at the rate of 15% for 6 months, because when it is sold 1st July, so from 1st January to 1st July 6 months now, 6 months depreciation is 2,295, this amount in outer column. And first asset is sold on 1st July 5. In this sale we may get profit or loss, so that profit or loss we should calculate now. Calculation I have shown here. See, first machine, cost of first machine is 40,000 rupees minus total depreciation. In 2003 first machine depreciation is given here 4,000 rupees. That amount 2004 first asset depreciation is available here now 5,400. That amount 2005 here separately we have calculated 2,295, that amount. So three amounts total 11,695. Now Cost minus total depreciation is equal 28,305. So first asset book value is 28,305. This asset firm sold for 28,000 rupees. Means they sold for less. Now the difference 28,305 minus 28,305 is loss in sale of this first machinery. So this loss in account we have to show. Which side? If loss comes, credit side we should show. If profit comes, debit side. So for loss 305 we have to write profit and loss account. And date is sale date only. When we sell that asset, on that day only loss comes, no? So same date, 1st July 2005. Thus, first asset sale value, first asset depreciation, first asset loss. Everything is completed. Now come to remaining assets. Remaining assets, here 10,000 worth asset and here 25,000 worth asset. Two assets are remaining with us. So these two assets are continuing with us now. Therefore, on these two assets, at the year end, 31st December 5, we have to provide the depreciation by depreciation account. And this is a diminishing balance method, no? So we need opening balances of these two assets. 10,000 asset, second asset, we purchased in 2004. 2004 depreciation in inner column available 750. So 10,000 minus 750. 10,000 minus 750, 9,250 is the opening balance of this second asset in 2005 year. So on that value at the rate of 15%, depreciation is 1,388. So second asset depreciation 1,388. Come to third asset. Third asset is purchased in 2005 only. 25,000 into 15% into when we purchase this third asset 1st July. From 1st July to 31st December, 6 months. Amount is 1,875. So second asset depreciation 1388 plus third asset depreciation 1875 is equal 3,263. This amount in outer column. So first asset, sold asset depreciation 305. Second and third assets depreciation 3,263. Finally, find out the balance carried down amount. Debit total 39,850 plus 25,000 is equal to 64,850 minus credit amounts 28,000, 2,295, 305, 3,263 is equal to 30,987. So two sides highest total, debit total 64,850, 64,850. Now come to 2006. So up to 2006 31st December he is asking us to prepare this account. So one more year is there. Bring this amount on debit side. Date is next date of this date. 1st January 6. Two balance brought down. In this 2006 year, there is no additional purchase, but sale is there. Which asset is sold? Second asset is sold. Second asset cost is 10,000, no? 10,000 worth asset we sold in 2006. When? On 1st July. So credit side, 1st July 2006 by bank, we sold this second asset for 2,000 rupees. Write down that amount. And on 1st July 6 we sold now. Up to that date only we have to provide the depreciation. So by depreciation account on second asset. Now 2006 opening date, opening balance. In 2006 year, opening balance of this second asset we want now. How it comes? See the previous year. In 2005 year, opening balance of this 10,000 worth asset we have calculated here now. 9250. This amount minus 2005 year depreciation 1388. So 9250 minus 1388 becomes the opening balance for 2006 year. That only here we are written. 9250 minus 1388 is equal to 7862. So 7862 is the opening balance of second asset in 2006 year. On that 15%, into how many months? From 1st January 6 to 1st July 6. 6 months we have this asset. So for 6 months only we have to calculate the depreciation. Amount is 589.6. Round of value 590. And in this sale there may be a loss or profit. That separately we have to calculate. So calculation is here. Here I have written second machine sale loss. Cost of the second machine 10,000 minus total depreciation. From 2004 year starts now, because in 2003 we have only first asset. So see the 2004 depreciation. In asset account it is available. 2004 second asset depreciation is 750. That value 750. And in 2005 second asset depreciation we have calculated here. See, second asset depreciation is 1388. That amount. And in 2006 590 is the depreciation on second asset now. That amount 590. So 750 plus 1388 plus 590 is equal to 2728. Now cost of the asset 10,000 minus total depreciation 2728 is equal to 7272. So book value of second asset is 7272. This asset they sold for how much? 2000 rupees. So they sold for less. Therefore there is a loss. Here I have shown that loss. Book value of second asset 7272 minus sale value 2000 rupees. So loss is 5272. Now last credit side we should write now. Sale date for loss by profit and loss account, loss amount. Now second asset sale related adjustments completed. Come to the end of 2006 year. On this date, which asset we have? Only third asset. First asset is sold, second asset is sold. Now third asset only we have. So third asset opening balance in 2006 year we need. See the previous year. In previous year, third asset is purchased for 25,000 and the credit side, third asset depreciation is available 1,875. So 25,000 minus 1,875 becomes the opening balance for 2006. In inner column I have written that 25,000 minus 1,875 is equal to 23,125. This is the opening balance of third asset in 2006 year. On that 15%. And this third asset in 2006 year full year we have now. Therefore months are not required. Depreciation is 3,469. That amount in outer column. Then finally balance carried down. Debit total 30,987 minus credit amounts 2,590, 5272, 3469. Then balance carried down is 19,656. So at the end of the year by balance carried down 19,656. Two side highest total 30,987, 30,987. Up to 31st December 2006 he asked, and on that day asset account is not yet closed, balance is there. Therefore for the next date bring the balance and stop the problem. So next date is 1st January 2007. To balance brought down this amount on debit side 19,656. And don't continue the problem because up to 31st December 6 only he asked no. So this is the solution. Take a screenshot of this. This is first page. Continuation, second page. And profit or loss calculation is in third page. So this is the end of present video. Hope this video is helpful to you. Thank you.